pricked up my ears. James, when we were talking about the sectors, we actually didn't get past dairy. How are things looking for lamb and beef at the moment?
When we consider what's happening in some of our markets, not too bad, really. US prices have pulled back a little bit in terms of beef, but they're still relatively high, and there's a bit of uncertainty going on around what is happening in Europe, and that has been a bit negative for prices in general. But the UK, in terms of lamb, then that's still holding up. Even though their government's looking at some spending cuts, then consumers have surprised me with how resilient they have been right through this recession. So, they're holding up. I'm not expecting to see many big increases in schedule prices anytime too soon in that market, though.
No, exactly. And now wool. Unusually, we can actually be reasonably optimistic about wool, judging by the prices for the last national auction, which I think was this week. Yeah,
prices are up, and I think a lot of that's been driven by the currency. So the currency has really provided some benefits for our exporters and for wool over the past few weeks. So we export a lot of our wool into China, and of course they buy most of it in terms of US dollars. So when the US dollar strengthens against us, then that's good news for our wool exporters, and that's probably been a good driver for why we've seen those prices increase. And of course, there's been a bit of a shortage of supply with the wet weather and shearing sheep and things like that, then that has had an impact too. But I'm not getting too carried away with the wool prices just yet. There's still a few things to work through there.
Now, Stuart, you've got some pretty strong opinions about this area of the business world. When we talk Hanover, it's hard to ignore the wider sort of huge destruction of value. You're critical of the likes of Craig Norgate and others who seem to shrug their shoulders and say, oh, well, it was a bad day at the office, let's move on. What's your view of these business people and the destruction of value that they've caused?
Yeah, I find it extraordinary looking at the destruction of value that we've had, and if one looked at the finance companies recently, I guess that's a good example, and Hanover was in that area. Strategic finance, another big one, and then as you mentioned, the rights and sort of issues around that. I think that we can't just say that it was outside us, that it was all external events that caused these things. There's something systemically wrong, I think, when we have that level of failure. So you can't blame it on corporate surveillance and say, well, if we had a stronger Securities Commission, this would work. It just seems to me that there's a basic misunderstanding of risk and return issues. Sure, if it works, you're a standout, but on average, it doesn't work. Just like lotto, occasionally someone wins, but a lot of our investments just don't have a positive return there. And if you don't watch the risk issues involved, if you don't manage the risk, then I think we get into trouble. And we've just been appallingly bad at it. I think back to attempts to move into the Australian market that haven't worked. More recently, an icon of New Zealand businesses closing 7 stores in the US for jewellery.
Michael Hill.
Yeah. So what what happened there? Was it
but
again
it seems to be
miss?
mainly in businesses which involve borrowing money from the public. And not just finance companies. I mean, look at Strategic. You can go back and see they were lending money to second-hand car dealers and third mortgages and that sort of thing. How safe is that kind of lending?
Well, I don't think it's very safe at all. I think it wasn't a good portfolio of investments.
But they were supposed to have almost blue chip status.
Oh, well, there's another good word, isn't it? If you want to go down another tangent there, another good example. But the public, and I guess you've talked about financial literacy just recently, the public don't seem to understand the premium that needs to be paid on some of these risky things. If you can get a term deposit at the bank at 5.5%, how much more do you need to make you want to put it into a finance company that's financing second-hand used cars?
Exactly.
And I think it's not 1.5%, 2%. You're talking very significant margins. And the public in New Zealand has thought they're on a good thing if they could get a couple of percentage points above the term deposit at the banks. And
good old-fashioned greed, really, Stuart, if you ask me, in terms of these interest rates that people have been snapping up. Well, that's all we've got time for today. Thanks to my guests, rural economist James Shortall from ASB and Associate Professor of Finance at the Waikato Management School, Stuart Locke. Well, we'd love to hear your feedback, so please go to our website, drop us a line and take a look at my weekly blog. You can find that and much more besides at www.country99tv.co.nz. Look forward to seeing you again next week.